Hello and welcome to Trade Room, where we help you become a better binary options trader through price action trading strategies. In today's video, we're going to be showing you a 1-minute expiry price action trading strategy that when you implement properly can yield some crazy good results. So let's get to it. Before we get started though, I must let you know that it is important to only invest money that you can afford to lose. Do not invest money that you cannot afford to lose. If you do this, it will result in bad trading results because your mind will not be in the right place when placing trades. So let's get to the strategy. Okay, it's important to first go over the chart that we're looking at. In this example, we're going to be looking at Euro USD. However, you can trade this on any asset on the IQ option platform. We are doing a 1-minute expiry, so make sure your expiration is set to the lowest possible expiration. Just hit the minus button until it does not go any further down. And then when trading your amount, make sure to never invest money that you cannot afford to lose. We recommend never trading more than 5% of your total trading balance at a time in one particular trade. The chart we are looking at is a 1-minute candlestick chart, so make sure 1 minute is set here, make sure candles are set over here. And then we are going to be using an indicator in this particular strategy. Make sure you are using a momentum indicator, and the one we are particularly going to be using in this strategy is the relative strength index, RSI. We are going to leave everything as is. We're not going to make any changes here. We're going to have a baseline period of 14, an overbought level of 70, and an oversold level of 30. You can just hit apply. And now let's get to the strategy. So this strategy is a 1-minute expiry, and it is a divergence price action strategy. It yields extremely good results. So let me first explain what divergence is in case you don't know. Divergence is where you have a contradiction in price to what you are seeing on your indicator. Okay, so in particular, we need price to either, on the indicator, we need price to either enter the overbought or oversold area before we even start to look if there's going to be divergence. We do have a divergence set up right here. We're going to use this as our first example. Now, what divergence is as price has gone overbought, it corresponds with this high over here. Price then comes back down and creates another high. The high that it has created here is higher than the previous, and I'll indicate that with a trend line just so you can see that it is clearly going higher. So as you can see, let me zoom in a little bit. Price has hit a high there, come back down and hit a higher high, as you can clearly see by the upward slope of the trend line. However, we have a contradiction on the indicator, and I will indicate that with a line as well. As you can see, we've got a high corresponding with a high over here, and then we have a higher high which contradicts our indicator. Our indicator has not created a higher high, however, it has created a lower high. This tells us that momentum may be shifting to the downside, and we want to look for sell positions. So when we have divergence on the overbought area of the RSI, we are only looking for sell positions. If we have divergence on the oversold area of the RSI, which we do not in this case, we would be looking for buy positions. Okay, so what we're going to be doing now is, now that we have our divergence, I'm just going to remove these lines. Once we have our divergence, we want to look for a sell position, but we are not just going to blindly sell the market. We are going to look for a pinpoint entry and a 1-minute expiry. Okay, so what we have is a high and then a low. This low forms a resistance. We have then got a high and another low. Here we have a new resistance that has been formed. Then we have the high again, which completes our divergence, as I've showed already. Then what we are looking for, after we have spotted divergence, we are looking for the most recent area of resistance to be broken and retested for a trade. So that is our most recent area of resistance. right over there. That is our most recent area of resistance. What we are then looking for is for price to clearly break this area of resistance and then come back up to retest it. And that is where we will hit in our pinpoint trade. Okay? And as you can see, this would have ended up being a solid profit. So we've got our divergence set up. We have then marked off our previous level of resistance, or support in this case. It is broken and turned into resistance. Excuse me, I was calling this resistance. This is support at the moment. It only becomes resistance once it's been broken. So price is then broken. We then want that area of resistance to be retested so we can take a 1 minute sell trade. And in this particular case, we would have placed our trade on this candle right on the top, and price would have either expired on this candle or on the next, which did not break that level, leaving us with a definite profit trade. So that's the first example of a good divergent break and retest setup with a 1 minute expiry. Let me take you to the next 1 minute trade, and that's right over here. Let me remove all of these drawing tools. And as you can see, we have a very clear and obvious divergent setup over here. We have highs. We then have a higher high. However, on the indicator, we have a lower high, forming a divergent setup. Very clear and obvious divergent setup. Let me draw that in. So we have a contradiction of our price moving upwards and our indicator showing us that we have potentially shifted momentum to the downside. Okay. Now what we are going to do is we are going to mark off our area of support that we want broken and turned into resistance. Okay. And after this high, which is where we would have spotted our divergence, this will have been our previous area of resistance. So we place a horizontal line there. We are now looking for a break and retest of this area in order to place a trade. And as you can see, let me just zoom in here so we've got it correct. That's our area of resistance where the candles have touched. We want a clear break and retest. Now here on this candle, we had a break, but not a clean break with no retest. We want price to break below and then come back up for the retest, which we had here, a break below. We then want price to retest so we can place our 1 minute trade, which we will have done on this candle. Price would have then either ended on this candle or the next, leaving us with a definite profit trade. Let's go to our third and final example of a divergent break and retest trade, and that would have been right over here. As you can see, price has made a low. We have broken the overbought area, oversold area of the indicator. Price has then come back up and created a lower low, which you can see has created a higher low on the indicator, meaning that we are now looking to take a trade. Let me just draw on with the graphic tools to make it easier to see. We have a low and a lower low, and then we have a low and a higher low, creating a contradiction of our indicators. So what we want to see next is a break and retest of our previous level of resistance, which will then turn to support once we have broken. So we will have placed our horizontal line on these wicks. That is our previous level of resistance once we had spotted our divergence right over here. We then wait for a clean break, which we have had, a retest of that, which we would have placed our trade right there. And this trade would have ended either on this candle or on this candle, which is both above the area where we would have entered, leaving us with a most definite profit trade. Now, I hope you found this video helpful. If you did, please give it a like, Comment down below with any questions or suggestions you may have, and please subscribe for regular binary options trading strategies that will help you become a better binary options trader.